Great, welcome. Good morning, guys. Today is October 8th. Happy Thursday to everybody. Hope you've had a good week so far in the markets. Today, we're going to cover what we think will happen today based on what we have in our newsletter. So the newsletter is over here. Well, it's not the newsletter, it's the email that you can send us in order to get the newsletter. So if you would like to get this document every day, Monday to Friday, before the markets open, if you email us newsletter@tradewithufos.com, we will put you on the subscription list and you'll get it every morning before the markets open, Monday to Friday. Now, the newsletter is a 2-page document that goes through 4 of the major markets in the world using the technology that we use to give you an overview as to where the probabilities lie. We spend about 15-20 minutes on the pre-market overview to just expand on those concepts, explain it a little bit more for those that might need a bit more background to what's going on. Other emails that you might need, my email address is there, becky@tradewithufos.com. That's me, Becky. And then the support team, support@tradewithufos.com if you have any questions about anything. So those are the emails there. Now, in terms of sessions, today is Thursday. So that means you have stocks at 9 a.m. and then investing at 1 p.m. Eastern. So that's within the Tradictive channel. Normally, Mondays, Wednesdays, and Fridays, those are your futures and options days. And then we have sharpening over the weekend. One of those sessions is a psychology session, and one of those sessions is a reinforcement, questions and answers, methodology session. So that's everything in terms of sort of developing skill, being able to follow us as we trade and learn concepts as you go. For those that want to understand from the ground up how to trade stocks, how to trade futures, how to use our methodology, how to build a trade plan, how to backtest, how to think about what's going on in their minds, how to understand trading psychology, then we do courses on those things. So we've got the stocks course going on at the moment, but the next course that will be starting will be the psychology class. That starts this Saturday, October 10th at 5 p.m. Eastern. It's a 7-day class. After that, we have futures, then trading plans, and then backtesting. Okay, so that's everything in terms of classes. I'll show you in a second how you can learn more about these things. Just need to put the disclaimer there on the screen. It's important that you guys read it. I know you might not be able to read it in the time that we have it on the screen there. It's quite quick that it goes through it. You can come back and read it later on if you want to, come back and pause the video. Or you can go to the website, which is www.youcantrade.com, to get additional disclosure information there. It is important that you read it, not just for legal reasons, but just to get an understanding that, of course, there is risk involved when you trade. Ultimately, it's up to you what trades you place. We can help in terms of demonstrations of how we do things and trading ideas, but ultimately it is up to you to choose which trades you place, when you place them, and how much money you put on them. Okay, so if you go to www.youcantrade.com and choose the Tradictive channel, you'll see that you can start your free channel trial. That is to access everything we saw there on the left-hand side, the different sessions we do every week. Then you have a clarification call. So you can click on that and schedule a clarification call if you have questions before you register for the trial. You can also browse courses. So that's to look at everything we saw there on the right-hand side. If you go there, then you'll see each of the courses we do and you can learn more about each of them individually. Once again, you can schedule a clarification call with this if you need to speak to somebody before you register for a course. If you click on the button, you just need to put in your name and email address so that we can send you the link to that callback. You will then choose a date and time required that suits you best so that we can obviously schedule the call for a time that suits you. You can put questions in if you'd like us to be prepared with answers to questions before you have that call, or you can leave it blank. As soon as you click request, you'll get a little pop-up to say that it's done, and you will get an email link or a link in an email to that call. Okay, so one more reminder, you can follow us mobilely if you'd like to. If you go to the App Store and search You Can Trade, then you can download that app and follow us mobilely. Okay, that is everything in terms of introductions. Let's look now at the newsletter. So the newsletter is what we have here on the right-hand side, and we obviously have our charts here on the left-hand side. Now, on the newsletter, we go through 4 of the major markets in the world. So that's the S&P, oil, gold, and the euro. Those are the 4 markets that we go through. Again, huge markets, lots of orders move through them. You'll notice that we go through a daily time frame for each. So of course, different things happen on different time frames. If you trade vastly different time frames, then things are obviously going to be different. But the daily time frame is one of the most commonly traded, if not the most commonly traded or used time frames for analysis. That's why we use the daily. Now, for each of these markets, we're going to look at a couple of concepts. So firstly, we're going to look at climate. Climate means what direction is the market going in and what are the probabilities associated with that direction. So we use technology here to analyze market data for us and come back and tell us what direction and what are the probabilities. So we use our auto climate app. That's what we see here on the bottom here. Ignore the lines for now, just focus on the colors and the thickness of the dots that we see here. So the auto climate app will analyze market data and it will come back with one of three things. It could show us a thick blue dot. That tells us we have probabilities to the upside, confirms upwards climate. We could have a thick red dot. That's a confirmed downwards climate, probability to the downside. Or it could show us a thin dot of either color. Blue is up, red is down, but the fact that it's thin, that is the auto climate app's way of telling us lack of probabilities, lack of statistical advantage. Normally best not to do anything on those days. So we're going to look at climate per market so we understand what direction that they're going in and the probabilities associated. We're then going to look at propagating. Propagating tells us how long can we expect that climate to continue based on what normally happens. So on the right-hand side, we see here what normally happens in terms of that movement. So if we're in an upwards trend or an upwards market environment, upwards climate, how long would that market usually go up for? If we're in a downwards climate, how long would that market usually go down for based on number of candles? Now you notice all of these are decimal places. Whatever the decimal place says, I'm going to round it up. So effectively add 1 to each of those numbers. Then on the left-hand side, we see where we are at now into that same move. So we can see from those two numbers whether or not we still have probabilities that the market continues in that direction based on what usually happens, or whether or not we're overextended, whether or not we've been going in the same direction for too long now, and therefore more likely to see a change of market direction and see it turn around. So we'll look at that per market as well, and we'll also look at nearest UFOs. UFO stands for unfilled orders. Essentially, we expect there to be buy orders that are waiting in a market to push it up and sell orders that are waiting in a market to push it down. Now, again, we use technology here to analyze market data for us and show us where these orders are likely to be. Again, showing us where buy orders are that we would expect to push price up, or where sell orders are that we would expect to push price down. If they are buy orders, then they show to us as green UFOs, these little green flying saucer things. If there are sell orders, then it will look something more like this. It will be... where are we? There we are. It will be a red UFO, a red band. At the moment on this chart, we don't actually have any red UFOs, but I'll show you when we look at new markets. So we're going to look at each of those concepts: climate, propagating, and nearest UFOs. That's using the technology that we use here in Predictive. What we're also going to look at is volatility per market. Volatility meaning how far can we expect these markets to move? How quickly can we expect them to move? So we look at current implied volatility, and we see in this column, all of these numbers are percentages. What these refer to is the expected movement up or down on these markets within 1 year, up or down, which means we can then reverse engineer it and understand what we expect in terms of movement up or down in 1 day, in 1 week, in 1 month. So from these numbers, we get the percentage movement up or down that's expected as a value, as a percentage of its current value, how far we expect it to move up or down in a day, in a week, and in a month, up or down. Now, the climate and propagating give us an idea of in which direction we're likely to see that happen and for how long. And the nearest UFOs give us an idea of where price is likely to change direction and turn around. So we'll go through this per market before we come down and look at news, although there's actually no scheduled reporting coming up for the rest of the week that could cause high impact, but we'll have a look at that after we do this. So let's start with the S&P. That is the top 500 US stocks. That's what we've got here on the left-hand side. So with the S&P, we see that we have a thick blue dot on the bottom there. That's telling us that we have a confirmed upwards climate probability to the upside. Now, normally the S&P would go up for 11 candles, and we're on candle number 7. So we still have probability that the S&P will continue to the upside at least for another few days. Again, that's not to say that will definitely happen. It's just higher probabilities based on what normally happens. When it comes to UFOs, we have buy UFO underneath us there. So buy orders at 3348.42 to 3323.69. And again, already worked. We had price come into it yesterday or the day before and then shoot up out of it yesterday. So it's already started to push price up. That's what we expect buy orders to do. And as we said before, we have no sell orders up here. No unfilled sell orders waiting to push price down for the time being on this time frame. So what that means is that overall with the S&P, we have probabilities to the upside. We have many things lining up for a move to the upside. Confirmed upwards climate, probability that it continues at least for another few days, buy orders beneath us, pushing price up, and no sell orders above us. Now, lots of probabilities on our side. However, just because something is probable doesn't mean that it's definite. That's not to say that we just jump in to do something. You may look at other variables before you place trades. We definitely need to manage our risk just in case. But for the time being, probabilities there to the upside when it comes to the S&P. Now, in terms of volatility, we would expect movement up or down in 1 year as a percentage of its current value of 27.79%. which means in a day, movement up or down of 0.60 points, 1.32 points up or down within a week, and 2.74 points up or down within 1 month. So that's the S&P. Let's look at the next market, which is oil. So at CL, that's the continuous futures contract there for oil. Let's just squidge this together a bit so we see what we need to see. There we go. So with oil, we now have the third day in a row of a thin blue dot. That tells us it's an upwards climate, but it's unconfirmed. Lack of probabilities, lack of statistical advantage to the upside. Again, we don't want to trade if we don't have probabilities on our side. We don't trade for the sake of trading. We trade because we have likelihood of doing well. So when the climate comes back to us and tells us we have an unconfirmed climate, lack of probabilities, no point doing anything. Now, when it comes to the usual movement to the upside, if this market was to confirm itself, usually oil would go up for 7 candles, and we're on candle number 3. So we do have probabilities that if it confirms itself to the upside, that it continues, at least for another few days. But again, we lack the probabilities on the climate itself for the time being, so nothing to be done. In terms of orders, we have buy orders all the way down here, obviously 2 on top of each other. The top one is 26.56 to 26.05. And we have sell orders here at 42.86 to 44.03. Of course, we are closer to the sell orders than we are to the buy orders. Overall, with oil, no probabilities one way or the other, nothing really screaming, buying or selling. Lack of probabilities, lack of statistical advantage either side. So again, for me at least, nothing to do there with oil. Now, in terms of volatility with oil, usually we would expect a movement, or not usually, from the current implied volatility, we would expect a movement up or down in 1 year of 25.50%, which means in a day, up or down of 1.16 points, in a week, up or down of 2.56 points, and in a month, up or down of 5.34 points. So that's oil. Let's look at the next market, which is gold. At GC, continuous futures contract once again there for gold. So again, I'm just going to move it a bit so we see better what we need to see. There we go. So with gold, we have a thick red dot. That tells us we have probabilities to the downside, confirmed downwards climate. Usually gold would go down for 3 days, and we're on candle number 1. So we do have probability that it continues to the downside. However, we do have buy orders in the way. We have a stack of buy orders literally just beneath us. In fact, they've already started to work to push price upwards. The numbers for that are 1876.9 to 1851.0. Sell orders quite a way above us there at 2039.7 to 2060.8. So we have a confirmed downwards climate with probability it continues, but we have a stack of buy orders in the way that we would expect to push price up. So we have different forces here playing against each other. I normally would prefer not to pick a side in the middle of a fight. We'll let it settle and then pick a side where we have more probabilities lining up. When it comes to climate, overall probability there to the downside, but as we say, buy orders in the way. So not all of the probabilities we would want. Now, when it comes to volatility on gold, we would expect a movement up or down in 1 year of 23.28%. which is 27.8 points up or down in a day, 61.2 points up or down in a week, and 127.4 points up or down in 1 month. Okay, let's look at the last market, which is the euro versus the US dollar. It is the spot Forex currency pair. I've just realized I need to load a few more bars here for us to see the sell orders. Let's just wait for that to load. There we go. Okay. So I'm just going to squidge it together so we can see all of these orders here. Now, with our climate on the euro US dollar, we have a thin blue dot, an unconfirmed upwards climate, Lack of probabilities, again, nothing to be really done when we don't have probabilities. Now, if this was to confirm itself, usually the euro would go up for 5 candles, and we're on candle number 1. So we do have probability of a continuous move there to the upside. And as I say, lack of probabilities with the climate itself. In terms of orders, we can see here we've got obviously loads and loads of orders, one on top of the other. I think there's 8 or so. The top one is 1.1597 to 1.1507. Those are buy orders. Then we have sell orders quite high up there at 1.2344 to 1.2414. So with the euro US dollar, again, nothing to be done when it comes to the climate, lack of probabilities there. If we see price continue to move up and confirm itself to the upside, then we do have probability that it continues for another few days, and we have room to the upside in terms of no sell orders around for quite a while to stop us. So it'll be interesting to see how this plays out, if we do confirm ourselves and therefore have a move to the upside, or whether or not this improbability or indecision might be telling us that we're going to have a change of climate. So let's see. Now, when it comes to volatility, we expect a movement up or down in 1 year of 8.03%, which means in a day, up or down of 59 pips, in a week, up or down of 131 pips, and in a month, up or down of 272 pips. So again, the volatility figures give us an idea as to how far we expect price to move up or down within those given periods of time. Climate and propagating will give us an idea as to in which direction that is more likely to happen and for how long. And the nearest UFOs will show us where it is likely that price will change direction. If it hits buy orders like we have over here, then we expect it to push price upwards, which is exactly what this most recent stack of buy orders has done for the euro US dollar. If it hits sell orders, then we expect it to push it down. Again, it's all using technology to analyze market data for us and come back to us with where the probabilities lie. Just because something is probable doesn't mean it's definite. So we do manage our risk. You may well look at other variables as well, but we at least don't want to trade if we don't have any kind of probabilities on our side. So hence why we are using this technology to help us find where we have statistical advantage. So that's everything in terms of the chart. So I'm just going to open up the newsletter and zoom in a little bit here and come down to the next page. Now, this page is where we look at news, upcoming reports that are likely to cause an impact. So we go to fxstreet.com and we go to the economic calendar. We filter high impact news and US markets. Of course, you can go to that link and change the filters if you want to and look at different things. So for us, looking at high impact news on US markets, we've already had it this week, Monday, Tuesday, Wednesday, nothing scheduled for today and Friday. Of course, as we know, especially at the moment, lots of unexpected things are happening, lots of volatility reacting to what's happening in the news, what's happening with Trump's health and all those kind of things. So these are all things that can impact the markets that we're not aware of ahead of time. What we look at here is when it's scheduled reporting, that we expect there to be a release of figures, or we expect there to be a speech or a report that comes out. So like I said, still bear in mind that there could well be news and reports that change market conditions or that increase volatility, especially at the moment. But for the time being, in terms of scheduled reporting, nothing coming up for the end of this week. So that's everything in terms of content for today. If you would like to join us and join the future sessions, the option sessions, stocks, investing, psychology and sharpening sessions, they are all part of the subscription. So you can join us at tradictive.com/youcantrade. There is a free 14-day access to the channel. So you can try us out for a couple of weeks first, see if what we do makes sense to you. If it doesn't, you can just cancel the subscription. If it does, then at least you've had a good couple of weeks to really know that it suits you. Now, in terms of upcoming classes, learning stuff from the ground up, the next one is the psychology class. Starts this Saturday at 5 p.m. Eastern. Now, psychology is something that is so often overlooked in this world. We all want to learn technique, teach me about what futures are, what stocks are, what options are, teach me how to trade. And that's great. We do need that. But you can have the best trading methodology in the world. If you don't manage what goes on between your ears, you are most likely not to actually follow the plan, not to be disciplined enough to stick to what you need to do. And that can cause problems for a lot of traders. So psychology is something that I would say is probably the most important thing that we need to get on top of as traders. So if you want to learn more about the psychology course that we do, go to tradictive.com/psychology live. And again, see if it makes sense to you. At the moment, there is a 2-for-1 offer. Register for any course, get an additional course for free. The second one needs to be of equal or lesser value than the first one. So have a look at the website, have a look at the courses we do, see what ones suit you best and how you can put them together in such a way where you get the most out of those courses. If you have questions on anything that we've covered today, courses, subscriptions, technology, whatever, just email us support@tradective.com. Otherwise, if you're joining us from within the Tradective channel already, we will see you at 9 a.m. Eastern for stocks and 1 p.m. Eastern for investing. Otherwise, I'll be back tomorrow morning. So I'll see you guys then. Hope the markets treat you well today. Have a good one, and I'll see you tomorrow morning. Take care. Bye-bye.